What's up, traders? Sandro O'Connell with Pristine Capital coming at you with yet another market recap video. This is our late night edition, team. Not gonna lie to you, the reason why this is coming out so late, I had a crazy weekend. I had one of my good friends' weddings this weekend, so it was pretty awesome. Went out to see him, went out to see his wife. We had, a bunch of beers, we had cigars. Like, it was just an amazing night. And yeah, I'm exhausted. I ended up falling asleep at literally like 3:56. I passed out on the couch. I was out for literally like 2 to 3 hours, and like I woke up and I had no idea like who I was or where I was. So yeah, I woke up and I was like, all right, let's do this recap video. Cause yeah, sometimes I just run myself into the ground like that. Like, I'll pull like all-nighters and just do whatever to get what I have to do done. And yeah, I'll run myself to E and like beyond E. Then every once in a while my body's just like, you need to stop. So yeah, that's what happened tonight. But anyway, so tonight's going to be a short video. We're going to talk about the market. We're going to talk about the price action. The price action is really unique. I actually love what's going on today. So let's talk about all that. Before we do that, quick risk disclaimer. Nothing in this video should be construed as investment advice or recommendations. Please follow your own trading plan and your own risk parameters. Last but certainly not least, do not YOLO your entire account to any one of my trades. And also, thank you to everyone that's been watching these videos. I really appreciate you so much. And thanks to everyone that's in the Pristine Capital trading community. You guys are awesome. And, I love the way everything is developing. So let's dive right into it, team. All right, so price action for today. Real quick. S&P 500 as measured by the SPY closed down 0.29%. We had the NASDAQ QQQ finishing down 0.8%. We had the IWM small caps team finishing up 1.52%. And we had the Dow Jones finishing up 0.21%. So really what we're seeing today was, in the morning, it looked like we were seeing market weakness. But I was pretty quick to say, we're not seeing market weakness. This is just rotation. It may seem like the market's weak just because the stocks you own are weak. And that's the truth. Right now, we are in the middle of the biggest pain trade of the year, aside from back in February. We have yields moving higher, and these bond-like stocks, the Microsofts, Apples, Facebooks, all those names, investors have been piling into those for months and months and months, every single day. Buy. Now we have a rising rate environment because we're going to have this Fed taper that's coming in. And the way the treasury market works in comparison to equities is, it's almost like, the equity market, it's like this big river. And the fixed income market has a direct impact on it. So when yields move higher, it's almost like throwing like a large stone in that river. And that stone is the bond market. It's treasury yields. When you throw that stone in there, it's going to create ripple effects. And it's going to have big impact. So we're getting these yields moving higher, and we're getting this rotation. Breadth was positive in the S&P 500 and in the IWM. And of course, breadth was negative in the NASDAQ QQQ. It was also negative in the Dow. Let's take a look at these indices. See, I'll show you what I mean. So VIX is up at 18.76. And I think the VIX is actually giving us a good cushion on the downside. The VIX is basically the market pricing in how much volatility can be tolerated. The market participants are saying, hey, we think the market's going to be moving this amount, so we're going to bid the VIX to this level. When the VIX is at a very lofty, elevated level, that means everyone's bought protection. Everyone's ready, assuming there's going to be market volatility. So it actually acts as a dampener, where like, unless the market really spills and the VIX like blows up, it's like, we just fell on the ground, but we're all wearing helmets, that sort of thing. So S&P 500, you can see put in this red candle, a little reversal candle, and now we're trading in the overnight market. We're down 0.1% in the overnight session. And let's look at the hourly chart real quick. Yeah, it's such a great time this weekend. Let me see. Okay, yeah, hourly chart. We did dip into this weekly value area, so this is something to keep an eye on. The first step in a trend in the very short term flipping is you start pulling back into value. So if we can't make it back out of this weekly value area tomorrow, that's where I start to get a little bit more concerned on this S&P 500. NASDAQ. Yeah, NASDAQ looks the ugliest out of all. But even the NASDAQ, it's not like it closed on the lows or anything. Look at this. So we pulled back. We traded inside this value area. And the value area, remember, that's just where 70% of transactions in the prior month occurred. And really the reason why this value area is useful is because players make different decisions based on if they're really underwater on their investment, if they're getting torpedoed out there, getting hurt, or if they're, majorly up on their investment. They're going to behave much differently. So yeah, that's why it's important. This gives us a gauge. Are most people above water, underwater, or somewhere in between? And yeah, NASDAQ is down overnight again. The Russell, let's go team. It's up 0.02% in the after hours. So this is not market weakness. This is market rotation. And, with the Pristine Capital trading community, we are hawks. We're watching the price action all day, every day. So for something like this rotation, like I'm not going to call anybody out by names, but like I see people putting out like videos like today of like, guys, I want to let you know that there's a rotation in the market coming. And like this rotation, it's been underway for like a couple days now. And like if you're if you're a passive investor, like you don't even need to care about rotation. You're just in your index funds, you don't care. But if you're an active investor and you're actually trying to win at this, you should not be getting into rotations like 6 days in or like 4 days in or whatever. So like what I mean by that, like I'll show you. So like this has been happening for several days now. Like look at for instance like the travel names, like Expedia. Let me just jump out here. This thing, it often starts off like very ugly. What the heck? Yeah, it's like Expedia, for instance. So Expedia has been like curling higher, and today was like huge extended range green candle, huge green candle, huge green candle, and then we finally got like a pause in the rally. Like JP Morgan, this stock, this is already 1, 2, 3, 4 extended range candles in a row. Like a lot of these, like, yeah, I would say today is the day where it became blatantly obvious to everyone that's not really like a top tier player of what's going on. Like with the small caps, yeah, a couple days ago, it was not obvious that the small caps were going to break out. But now today, yeah, like there's going to be a lot of people who suddenly are like, yeah, this thing looks really good, which I like because that means the trade could actually get that escape velocity. So I'm very overweight the small caps. I've been talking about the past couple days, and I have 3 trades on in the small caps right now. I'm very long call options in this group. So yeah, like we'll see what happens, but the main dynamic here, and I went over this last week. I went over this in our weekend analysis for Pristine Capital members, but this is really like the linchpin in this trade, and this is the real kicker. So this is hedgeopia.com, and you can see how hedge funds are positioned in the market. And look at this. This is as of last Tuesday. Keep in mind, it doesn't count this crazy rally we've had the past couple days. But look how short these hedge funds are. The Russell 2000, the IWM, the small caps. They are so short, and they've been building short positions while the small caps have moved sideways. So what that means is as we hit the upper end of this recent range that we've been in, there's rocket fuel that can really push us to the upside. So I'll show you. So like, let's look at IWM, for instance. So IWM, we're now trading above this monthly value area. So we're above intermediate term resistance, and now we're above all these key moving averages. We're above the 20-day, 50-day, 200-day. The other indices, they're not above those key moving averages. Now as we move our way up the right side of this base, this is our weekly chart. Suddenly as we start clearing these levels, those hedge funds are going to start tapping out. They're going to start to get hurt. The higher we go, the more pain we're inflicting on them in this max pain trade. And that could really be the push that gives us that escape velocity to actually break out of this range. So that's why I think the odds are in favor of, being very long these small caps. It doesn't always play out that way, but I certainly think there's an edge there, and I always want to be where the edge is. And then with this NASDAQ, we're seeing the exact opposite dynamic where the NASDAQ has been outperforming for so long. So the small caps have gone sideways for 7 months. NASDAQ has gone, to the moon essentially. So that's why I think I was not interested in buying the dip in the NASDAQ today. Even if it bounces, I think a lot of these high growth, high valuation names that are trading 80 times sales, 70 times sales, 90 times sales, I think they're going to be shorts for a while, especially while the yield curve is moving like this. It looks like treasuries, you can see treasuries are getting hit. And these 10-year treasury yields, if you're in the mortgage business or something like that, that's where these 10-year treasury yields really matter. These 10-year treasury yields, it's basically the biggest benchmark in the bond market. And we're actually approaching these levels. This was back in February and March. This was when growth stocks got hammered. And if you were trading this, you know exactly what I mean. We ended up having this bounce over the summer where these treasury futures started rallying. The 10-year treasury yield went all the way back down to 1.2%, sub 1.2%. And now we're getting, okay, these yields need to start moving higher. These treasury futures are declining. So what could end up happening, and we don't have evidence of this yet, but what were to happen if we broke through the bottom end of this range? What's that going to do to these stocks that are trading at 90 times sales or 80 times sales? Those are the ones, that's where I think the real risk is in the market right now. See, I think the market's just doing some rotation, nothing too crazy, and we're approaching year-end seasonality. So I think it would kind of fit this max pain trade. Everyone is overweight growth stocks because those are the only names that have really worked for the past couple of months. So I think it's going to take, a couple days to a couple weeks to really correct this imbalance. So we'll see what happens. So in terms of, let's take a look at go a little deeper real quick. Finviz heat map. You can see, just we were talking about energy outperforming. You can see some of these names like Tesla kind of buck the trend in these mega cap names. I'm currently long Tesla. And Microsoft, Apple, Google, Facebook, Amazon, all underperformers today for good reason. We had the banks outperforming, so some nice strength. Sectors, we're seeing the same thing. Our top 3 slots in terms of momentum team, energy, regional banks, and cannabis. Those are not our typical leaders. So when the leadership changes like that, as an active investor, active trader, you have to pay attention. And then our laggards, you can see we have gold miners, genomics, and utilities. Utilities was a really good performer over the past couple months, and now not so much. K-Web, the Chinese internet, are also moving higher. We're going to talk about the K-Web in just a moment. Style factors, high beta up 1.02%, cyclicals up 1.98%. Let's real quick, we're going to go through some of my trades for today. I'm going to keep it super brief because, I'm going to keep it pretty brief on the trades. So let's see. So I closed out my Palantir common stock for $28.05. I paid $28.03. So I had a whopping 2-cent winner on that team. Basically what I did earlier in the session, I knew that, okay, I'm playing, I have my hand of cards, which is my positions. And I'm like, okay, how does my hand look, compared to this market setup? So I go, okay, I'm long the Dow Jones, I'm long the small caps, but I do have on a lot of these growth stocks, and I don't think they're going to be performing well given what I'm seeing. So I moved my stops up on some of my growth names. So Palantir, I was like, it's not like I have a big winner in this. Let me just move my stop to break even. So I jumped out of Palantir. Yeah, and sure enough, Palantir ended up closing, way below where I closed out of mine. So yeah, Palantir, this name could still do well over the intermediate term. I think it's likely going higher. But yeah, in this environment, why would I be in these high growth names when I could be in some of these underloved, more value names that really look like they could have a lot of upside? So that's always important. Like, in everything other than trading, you never want to be a quitter in life. Like everything, it's like, finish what you start, go home with the girl that you came to the dance with, like all that stuff. With trading, you want to be a professional quitter. Like, you want to be quitting all the time. Like, you want to be, the moment you lose confidence in your hand, you want to fold that hand. And if you're not successful in trading or investing, the number one reason why you're not successful is because you don't fold your hand enough. So if you're not, crushing it, you're not killing it, you're not even like profitable, anything like that, look back at why you're not. And most likely the reason is you're entering positions, the market dynamic changes a little bit, and you're not changing your, you're not closing out those positions. So yeah, what I try to do is, as soon as I feel those dynamics changing, just pop out. Affirm, this name was actually doing decent. Like, Affirm, I believe this one closed green today. And this one I'm long in the trend portfolio. Yeah, Affirm, nice close today. But I just needed room in my portfolio to add another name. So I closed this one out for a little winner, maybe like a 1%, 2% winner. And I think this one looks good for the longer term. But yeah, I'm long this one in the trend portfolio. So I just closed this one out as well. And then Datadog. So this was one I really liked. I had this November 19th call spread. Closed this out for 360. I paid 390. I just said there's better places to put this capital. And I did that at 947. Sure enough, Datadog, yeah, this is another one of those high growth, high valuation names. While those names are in season, Datadog is the place to be. But when they're not in season, when the dynamic shifts, why do I still want to be in that? I don't. So yeah, Datadog, I think it's a fantastic company. This is another one that, you could easily have in your long-term portfolio. Yeah, close this one out. And then what else do we have? So Datadog, Alibaba. So let's go through this. This is going to be like one of the more like high value points of this video. Like, one thing I want to make sure that I do in these videos is I always have like, okay, I do this XYZ every video. We always go through the sector, style factors, whatever. I want to make sure, like, it's much better to have like a 1-minute video that has like at least one really high value point than have, just like a 15-minute video and maybe during that day there's really nothing to even talk about. So yeah, Alibaba team. So I've been trying these Chinese names for a while, basically trying to like bottom fish these. I had some success, had some stop outs, and I was like, you know what, these Chinese names, like, they're not bottoming out. We have the Evergrande situation. I'm going to leave them alone for a little bit. And what I saw today was very interesting. So I'm going to go to my Cheddar Flow. I'm actually moving away from Cheddar Flow. My subscription's expiring in a couple months. And I'm going to be using just VigTech. Yeah, I think this is a pretty good illustration. So what I noticed this morning was I was always seeing like put options coming down for these Chinese stocks. Like, everyone's shorting them. Short them, short them, short them to the ground. And these stocks have been dropping like stones. So they've been dropping like stones, like K-Web. It's been in a horrible trend, right? Like, this is just really ugly. Alibaba, for instance, just been in a really ugly trend. Horrible. Looks like trash. And what I noticed was, for today, I started to see all this bullish options flow come in for Alibaba. So Alibaba, I saw an order come in at 946. Okay, 1.4 million going out to 2023. It's just one order, who cares? Then again at 10:04, a chunky order for 9.1 million. And once I saw the chunkiness of that order, that's when I knew, okay, some big institution or player might actually be allocating to Alibaba. And then even more at 10:06. Look at this. More millions coming in for Alibaba out to 2023. So I put on a position in Alibaba just for that reason. Then also Futu, they came in for December. Futu, I have not been seeing any large options order flow for either. Another Futu order out to December of 2021. Then later in the day, this EEM, this is an emerging markets ETF, an order for that. Tiger, which is another Chinese name, an order for this. So there's some institution out there. I know BlackRock announced that even though there's all this Evergrande stuff, they're opening up a new Chinese fund. BlackRock's the largest investment manager in the world. So they're the gold standard. They make the rules of the road. If they're opening up a new China fund, that to me says these names, they're not done. So I did put on a position in Alibaba. So I entered this as a day trade, but I did hold this trade. So I got long the October 15th Alibaba 147 calls. And yeah, I just put day trade based on the options flow I just saw come down. So I put this in at 10:09. Very quickly, I just saw that flow. And just really off of this is unusual. Boom, going for it. And these have worked out nicely so far. Closed out the remainder of my Twitter. Twitter just didn't look like it was showing that relative strength, so boom, folded it. For 234, I'd paid 287. I rolled out my Dow Jones calls into the future just because they weren't moving fast, so I had some October calls. I rolled them out to November. And then towards the close, I got long AMD. AMD team, let's look at it. So this name, it looks nice. It had a good showing today. So AMD up 2.23% above the key moving averages. Nice green candle. We chewed through. Look at this team. So in one candle, look how many days of weird wonky price action there are here. So 1, 2, 3, 4, 5, 6, 7 candles over here to get a small move lower in one day. We just negated all of those candles, and look how much volume it came on. This is a sizable uptick in volume. So I like this setup, so I bought some call options there. And then Disney as well, I allocated to this name just in case we continue to get some more upward momentum in these value stocks. So yeah, we'll see what happens. Yeah, those are my trades for the day. That's the major gist of this market that I'm seeing. Just that, I think this small cap value trade has some legs to it. I think we're in the we're in the midst of this pain trade. And all these guys that are invested in these companies like Net, they're hoping this is the bottom. They're like, all right, we're at that 50-day moving average. This is probably the bottom, right? I think there's a high chance this is not the bottom because this name, look at it, it's trading at 75 times sales after this correction. So when the Fed starts tapering, I think it's very appropriate. So Net is a fantastic company. There's no doubt about that. This is a huge market leader. But a huge market leader, when rates start moving up, maybe the premier assets should be trading at 40 times sales. The last time we had one of these corrections, back in February when rates started moving higher. So look at what Net did. It was trading at $94 at the peak. And then when we had that growth stock correction, it went from a peak of 95.56 or 95.83, and it traded all the way down to a low of 61.13. So it lost over 30% of its value. I don't think it would be unreasonable for this thing to lose 30% of its value again. So it was at 137 spot 04. If it were to lose 30% of its value, that's trading somewhere around $100. So maybe we retest this level down here. So I am going to be looking at a couple of these names. Went over these earlier with Pristine Capital members. We created a small short list of these companies. Now I'm going to be looking at these for some short opportunities. And then real quick, I'll show you. Let's go to our big tech options race. Then we'll break here. Let's see what we got. Today's combined flows. Let's see if there's any new names on here. So Alibaba, of course, we already talked about that one. Yeah, AMD over here. Boeing. Boeing never appears on this list, and this is a value stock. And then Moderna, this one's just been ripping faces. IWM. I want to look at IWM. Where? Wow, firm had the flow. Let's see AMD. Yeah, IWM's not like jumping out to me. Let's just take a look. Ooh, look at all this bullish flow. Look at this. So they're locked and loaded on AMD. And this is for October. January, October. Yeah, so we're going to end off on that team. Yeah, there's a bunch of bullish flow for IWM as well. Yeah, let's wrap up there. Yeah, thank you so much for watching the video. Definitely going to be putting this one out earlier tomorrow. We'll be back to our normal schedule. That being said, have a great night, everyone. I'll see you all tomorrow.